Hey YouTube, this is Zach with Achilles Financial. Today we're going to be talking about oil again, as well as the key factors that are affecting this right now. As you can see over the course of the past month, in particular, oil prices have cratered, and Gush, which is a leveraged fund, has taken it on the chin, coming off the high at the end of the beginning of July of around $100 a share, all the way down to $53.60 per share. Which leads to the obvious question of what is causing this and why do we need to make sure that we're reevaluating our investment thesis on the long oil play. So there's a few things that begin happening around June and July. The first item that I'll point to is going to be a lot of information surrounding the Delta variant of COVID, as well as potential lockdowns in the United States and much more broadcasted lockdowns in other countries, specifically Australia, New Zealand, and China. China being the largest of those countries, as well as the one who is the largest oil consumer. That is when we started seeing some of the major drawdowns in the middle of July. Now, what we've seen going forward that we would have expected to see additional price hikes would have been what we see currently going on in Afghanistan today, or just any turmoil in the Middle East. However, during that same time period, we're seeing weakness in Chinese economic data, which is pointing to a strengthening of the US dollar. So the way that I'm going to showcase that is going to be utilizing UUP. This is simply a bullish fund, a dollar index, and you can see the last time that we saw such a large increase was I'll go to the 3-year view so we can see this. But when COVID originally happened, the dollar spiked because by and large the US dollar is seen as not only the reserve currency for a lot of other countries, but it is significantly utilized as a staying power, as the currency a lot of people want to hold, and the asset that a lot of people transfer money into in times of trouble. So flashback to what we're seeing so far this year, you're seeing weakness in Chinese economic data as well as turmoil in the Middle East, and we've seen that rotation into a strengthening dollar, particularly as a lot of other countries continue to have significantly lower vaccination rates and less access to the vaccine than a lot of United States states. For that reason, you're going to continue to see this trend. So the combination of a strengthening dollar as well as weakening demand is what's causing the drop in oil prices. The reason why the dollar has such a strong impact is because oil is priced in US dollars. That's one of the benefits of having that reserve currency. So by virtue of the fact that we are seeing that decline in oil prices and the rise in the US dollar, it's because that purchasing power is being held to the dollar standard. So when we see a weakness in the dollar, we see the price of oil rise, which is why when we saw this back here, as well as this huge decline from April into June, we saw that large increase corresponding with the oil prices. And that is the expectation going forward surrounding some of the taper expectations. Is now that the Federal Reserve has said that they're going to taper, has said that we can potentially expect to have interest rate conversations increases next year. That's going to be what we're going to look for, because right now that's strengthening the dollar because it says, hey, we're going to stop devaluing the currency. The question is whether or not that's going to happen. So with that being said, do I think that now is a good time to buy into Gush again? I'm going to be looking at this over the next few days. Chief among that is because I like exposure. I do have a few shares of Exxon, and by a few I mean like 5. Other than that, I have no oil exposure right now, and I'd like to build some because I do think it's one of those things that you can buy and wait for that run up. Again, you can see if we had bought in last year, you're seeing a 400% increase depending on when you're able to get out. What I've been looking for is buying in under 70 and selling more close to the 80. Now we're significantly lower than that. So we don't have that exposure, but that's what we're going to be looking for. Is now the time to start playing in this field. I am going to be looking for the share prices just because, like we saw when it was trading around all-time highs, just because there is a lot of potential catalyst, oil is one of those things where you can see the ongoing threat of shutdowns can shut it down pretty quickly as well. So I'm looking to play the shares and see it go back up because this is a leveraged fund, but I do think oil prices on the long term will have a lot of potential to go higher due to decreased US production as well as increased consumption in the future. But that's all just my opinion. I'm by no means a financial expert. I'm just some guy on YouTube. So if you have any questions, feel free to drop those in the comment section down below. And if you find this content helpful, please leave a like and subscribe.